Welcome to the Osborne Morano Tax Talk. And today we're going to talk about hiring your children, or otherwise known as income shifting. The concept here is simple. You hire them to work for you. In fact, the IRS's own website says one of the advantages of operating your own business is hiring family members. See IRS Revenue Ruling 73-393. The primary benefit of hiring your children is to take income that otherwise would be taxed at your rate and shifting it to them to be taxed at theirs. Your children can claim the full standard deduction of $12,400 for 2022. And even if you claim them as dependents on your return, the next tranche of income is taxed at just 10%. This means you can shift a pretty substantial amount, which can in turn save substantial tax. Does your child attend an expensive private school? Do they attend summers and expensive sleepaway camp? Do they participate in expensive travel sports leagues? None of those activities are tax deductible, but you can pay them for the equivalent of tax deductible dollars by hiring them to work for you in your business, paying them as a deductible wage and shifting the income to be taxed at their 0% rate for wages up to the standard deduction amount. More good news is if your business isn't taxed as a corporation and your employed child is under 18, wages you pay them aren't subject to FICA FUTA. If they're under 21, they aren't to FUTA as well. Now, shifting your income to children can boost your own qualified business income deduction in two ways. First, if you're in the phase out range, it lowers the income for the business to avoid that phase out. Second, their W-2 wages will increase the overall W-2 wage base for calculating your allowable deduction. Hiring children gives them earned income to make both Roth IRA contributions up to $6,000 or their actual earning, whichever is less. They can do that for traditional IRAs as well. If you don't even need to use their actual earnings to fund the account, you can let them keep the money or use it for school, camp, or other activities and use your own money to fund their Roth IRA. Establishing a Roth offers two benefits. First, it sets them up for a lifetime of tax-free compounding. And second, getting them involved in managing their account gives them priceless real-world money management experience. You can also include your children in employee benefit plans, SEP, profit sharing, medical expense reimbursement plans, whatever you offer. Finally, consider the benefits you and your family and your child may get from working together. Strategy, you have to dot your I's and cross your T's to make it work. First is the minimum age for hiring your child. For now, at least, they have to be at least 7 years old. Now, that may sound young. Some advisors suggest hiring younger children to serve as models for your advertising. We're not aware of any IRS ruling or court ruling against that strategy, but you should be aware there's no positive legal authority as there is for hiring children age 7 or above. You have to pay them reasonable wages for the service they perform. The tax court says a reasonable wage is what you'd pay a commercial vendor for the same service with an adjustment made for the child's age and experience. So if your 12-year-old son cuts grass for your rental properties, pay him what a landscaping service might charge. If your 15-year-old helps you keep your books, pay him a bit less than your bookkeeping service might charge. Do you have a teenager who can help with your website or social media? Would you pay a commercial vendor for that service? The work has to be specifically related to the business. You can't just pay them to do household chores and call it a business expense. You have to prepare a written job description and keep a timesheet or other log of your child's work. Pay your child by check or some other method so that you can verify it. Deposit the funds in an account in the child's name. However, this can be a Roth IRA, a 529, or a custodial account. Needless to say, the IRS and the tax court will pay attention to make sure it's going to their account. Be sure to prepare a W-2 at the end of the year. If your child is under 18 and not subject to FICA, simply enter 0 in box 3 and box 5 where they call for Social Security and Medicare wages. If your child is your only employee, also have them file a W-3 with the Social Security Administration. If you're not already managing the payroll for your business, your tax preparer can handle it for you. And what about child labor laws? The Fair Labor Standards Act has all sorts of standards for farm work, non-farm work, and different ages, under 14, 14 to 15, 16 plus. The good news is those rules don't apply to hiring your own children unless your business is engaged in mining, manufacturing, or other hazardous activity. The exclusion even extends to partnerships and corporations, so long as you and or your spouse are the sole owners of that. Now, your state may have some other laws. But if you're worried about the kiddie tax penalty, don't. It doesn't apply to employment income, just investment income. So again, hope you enjoyed this. I was Morano. We prepare tax returns as well as anybody. And what makes us shine is we know all the tax strategies for business owners to help more of their hard earned money. Thank you.